Hey, what's up, everyone? Welcome to another Wealth Webinar Wednesday, our weekly show we do going through different financial topics, focusing on the infinite banking concept and everything related with that, all the different aspects of your financial life. Today's going to be a lot of fun. We are kicking off a new 9-week series. So we are going to start having a rotating kind of topic basis for each week over a 9-week segment. And today is going to be a lot of fun. Today is week one of the new 9-week series. And today is going to be about IBC foundations. Okay, so we're going to be getting into a little bit about the mindset of infinite banking, but more importantly, what if everything was connected when it comes to your money and your financial life? What if every financial decision creates consequences somewhere else? And that's what we're going to talk about on today's show. So I'm really looking forward to it. But before we dive into the presentation and we dive into what that means, when we say, how does every financial decision create a consequence somewhere else? Let me first introduce myself. My name's Stephen Nagy. I have been in the financial education space since I was a personal financial advisor with Ameriprise Financial in the mid 2000s. From that, I learned a lot about real estate investing and entrepreneurship. So over the last 20 years, I have ran business, founded businesses. I've worked heavily in the real estate investment space. Over the last 6 years, been very, very heavy in the infinite banking, becoming your own banking industry. And what I found over the years is I really enjoy working with clients. I really enjoy presenting. I really enjoy sharing my knowledge, my experience, and what I've learned over the last couple decades, not only in my own life, but what I've learned from my clients, what I've learned from attending masterminds and following high level business owners, multimillionaires, and the rest of it. So I live down in South Florida with my family, my wife, Courtney, my son, Bryce. Yeah, it's a beautiful thing. So I'm here today to share with you the knowledge, the experience, and the education around the infinite banking concept and how you can change one thing in your life where your money goes first that could change everything for you. Now, real quick, I just want to mention we are not here selling anything today. I'm not like pitching you on like tens of thousands of dollar program or anything like that. We're talking about a concept. Now, we do use a product to build this concept on, and we'll talk about that today. It's a specially designed and engineered whole life insurance policy. And we like to say a lot of what we do in our business is life insurance done differently. But we do base that product on a whole life insurance policy, not an IUL, not an index policy, not a variable annuity or variable index policy, a whole life insurance policy. And we'll get into today why we build it on that product. But today's not about that product. We're not going to talk about a bunch of illustrations and walls of numbers and all of that. If we have time at the end, I'm happy to show some examples. But today's going to be more the mindset, the foundation of what Infinite Banking 101 means. And that's what I love to talk about. So it's going to be a lot of fun. I'm really looking forward to it. I've been partners with Chris Naugle since 2019 when we really launched Money School and then built it into kind of what you see today with becoming your own banker. And we've rolled out the Private Money Club along the way as well. And I have my co-host with me today, Mr. Brian Fouts. So Brian, quick background on yourself.
Yeah, hey, buddy. Brian Fouts here up in North Idaho. Yeah, I got my start in life. I went to college, got a degree in construction management. That's what I did for many years. And then I was introduced to the infinite banking concept, gosh, man, it's 14 years ago. I had no clue what it was. A financial advisor set this policy up for me. It was not a great policy, was not what we do today, but that set me off on a lesson to learn how to do this. And one of the biggest things I learned around infinite banking is the mindset has to shift for a lot of people for it to work or make sense, and me included, by the way. And so in 2016, so 10 years ago, I really dove into infinite banking and found a mentor. I built a course on it and started helping people do it. My first webinar on this was 10 years ago. So I've been doing this for about 10 years, helping people do this, help thousands of people do it now, and this made my main focus right now. But I've done a lot of other things too. I used to teach real estate investing, which is something I'm actually going to get back into. Done a lot of financial education, businesses, things like that. I used to own a couple businesses that did that. So very fortunate to be here and be part of this team. So yeah, we're going to have a lot of fun today and share some pretty good information.
Yeah, and just to kind of share a little bit more insight, I really work a lot closer these days with our agents, our mentors on the business side of things. I love to present and educate on webinars. Brian spends a lot of his days working directly with you all, working directly with our clients, solving their money problems, visualizing what that looks like, and helping them implement all of the stuff that we talk about and educate on. So I love the mindset aspect of it. Like I said before, we're not here to sell anything. We're here to have you think. Something I've learned over the last 20 years is if you can have somebody make little tiny changes in the way they look at things. If you can change the way you've always been taught something and just make a little tiny adjustment to that, it can change everything. And so I love to say, listen, a lot of what we talk about, maybe we agree on it, maybe we could debate it. There's different perspectives in life, but we want to think about things. And if we can think about things for ourselves, I think that this will make a lot of sense. So at the end, my goal again is not to sell anything. I don't have anything for you to here to buy, but I want you to think differently by the end of this. I want you to realize, hey, maybe I have been asking incomplete questions. So if I can get you thinking that at the end of this hour, hour and a half, then I consider that a success today. And we will share with you how you can connect with Brian and our other money mentors to implement anything that you do like. But again, if I can get you to think a little bit and say to yourself, hey, maybe I'm asking incomplete questions. Maybe every financial decision I'm making is leading to consequences I never thought about. That's a win for us today. And I'm looking forward to seeing how this goes. So with that being said, Brian, you ready to kick this thing off?
Let's do it.
All right, so we're going to start here today with that very question. What if everything was connected? The hidden connections behind every financial decision that you make. So we start today with a question that has nothing to do with a product, an account, or a rate. It's bigger than that. What if everything was connected? What if your debt, your taxes, your retirement, your cash flow, your investments? What if none of those were actually separate problems at all, but parts of one connected system? So here's what we've come to believe after years and years of doing this. Most people have been taught to attack their financial life one piece at a time that quietly keeps you feeling stuck, no matter how many of the right things you feel like you're doing. So you'll see on screen a handful of little orange dots floating separately. The scattered, they're disconnected pieces of your financial life. You can kind of use those at the representation. So this is exactly what we want to kind of think of. We want to say, okay, where are these pieces of my financial life and why are they all separate? Why are they not working together? So let me show you what I mean. So starting with the way that almost all of us have been taught to handle money. Oh, let me look at my taxes separate of my investments, of my retirement, of my debts. And how do we start bringing that all together? Does that make sense, Brian?
Yep, 100%. Yeah, it's one of the things. I mean, I always feel a lot of people are doing financial decisions in bubbles, and it's not really that's not really the way it works. They do overlap, and you've got to think holistically about this. Otherwise, you'll make mistakes like I did in the past, where I wasn't thinking about this investment versus cash flow versus my future, and made some decisions that that were very expensive lessons learned.
All right. So just for obviously compliance reasons, this is presentation is for education only. So Brian, myself, our team, we are licensed insurance agents. We're licensed in all 50 states to do business with everyone that's on here, since we have people that we just saw from all over the country. But for purposes of this webinar, we like to look at it's not financial advice. This is illustrative examples. There's always investment and market risk. There's always, there's always risk out there. Now, the product, the whole life insurance policy, one of the reasons we do use whole life this way is because it is a guaranteed product. Now, I come from a fully licensed securities background where you could never use those words guarantee because the markets are never guaranteed. But one of the beautiful things about what we do is these policies are guaranteed to grow. Now, you do have to keep the premiums going. We have to make sure we follow all the correct laws like MEC laws and things of that nature. But that's what we are for, to be able to look at your overall financial situation and help you start creating that strategy and creating the right system for you to be able to take full advantage of it. But I just wanted to throw out the quick disclaimer before we dive into this. All right, so here we go. And I try not to read kind of the words right on the screen. I want to be able to have you guys kind of see these as visuals, and Brian and I can kind of discuss our way through it. So basically what we're told is we have a set of separate problems. So there's the debt problem. We're always told, okay, you have a debt problem, pay it down, pay it down, pay it down. You got to do that first, right? Or not. Think about this stuff again. I want you to start thinking. If you have debt, what are you doing with it? What does that look like for you? Are you tracking it? How are you paying it down? What does that look like? Are you worried about it? Okay. Then there's the retirement problem. Are you maxing out your 401k while still having credit card debt? Like these are all things we need to think about. And I'm not going to get into the details right now why that's important, but start thinking to yourself. Okay. Then there's the tax problem. Are we paying more taxes than we need to? Are there any kind of deductions or other strategies we could be using? Then there's the cash flow problem. And then there's the investing problem. Are you picking, people are always like, are you picking the right funds? Are you getting too aggressive? Are you being conservative for your situation? That's how financial advisors look at it, right? Be more risky and aggressive when you're younger, become more conservative later. Or are we trying to time the markets? Are we in the right types of investments? All of that plays into it. So what do we do? There's all this different advice out there. All these different types of money problems. Exactly do we do? What exactly are we taught? We attack them one at a time. We hire a different expert for each one. And here's the strange part. A lot of us do all of it, check every box, and still feel stuck. We still feel like we're running in place. So today on Wealth Webinar, what if these were never five separate problems? What if they're all the same problem, just wearing five different costumes? Because if that's true, then attacking them one at a time is exactly why it never quite works for most people. And if you've ever watched our 90-minute presentation on the infinite banking concept, you'll hear us talk about it all the time. Have you watched the 90-minute? Have you watched the 90-minute? Well, what does that say? It talks about how 1 out of 10 people in this country get to retirement and are financially secure in retirement. So that leaves 90% of everyday Americans that get to the retirement point and they have to work longer, or they can't have as nice of a retirement, or to get there, they had to drastically change what they were already doing in life. And then even worse than that, the Social Security Administration tell us only 5% of people will actually be able to live throughout retirement the way that they plan. So you get there, even the 10% that get there, only half of them actually are able to keep that going throughout retirement. So we feel like we're doing everything right. We're attacking these problems with the right people. And for most people, it ends up just not working out. So on the screen, we have those separate problems that are floating around right there. So we want to kind of get familiar with this, treating money as separate problems. But what if we can bring this together? And so just to kind of give you a couple examples of this, Brian, and you can pipe in too. I know you work with clients every single day. I mean, how many people are like, yeah, I got my tax guy, but is it a tax strategy, or do you just have somebody that's filing your taxes for you? Big difference. If you're not planning throughout the year for your taxes, I guarantee you're missing a lot. Do you ever get that, Brian?
Yeah, when I used to teach, financial literacy and education, taxes was a big part of it because I always say that the wealthy play the tax game every day. The IRS plays the tax game every day. The average person plays it once a year when they have to file their taxes. And that's not going to win the game. And so if you want to win the tax game, you got to be playing the game every day. And you've got to not just file your taxes, you've got to have a tax strategy. And most people don't realize there are two different types of tax people out there. Tax preparers, they're the ones that just file your taxes for you. And then there's a tax strategist that works with you at the beginning of the year to plan out the entire year so that you're not paying as much taxes, or overpaying at least. That's a big one right there. And so I learned that one the hard way. I had a business. I brought in a tax person. So I had a business. I was running this. It's kind of interesting. And I was paying just taxes, didn't really think about it. I brought in a tax strategist, and they went and refiled my personal taxes, by the way, prior 3 years, which you can do that. And I don't remember how much I got, Stephen. This is with a W-2 job, by the way, and some side business income. But I got a check for $7,500 back because I'd overpaid on taxes. And so if you can find a tax person that can do a 3-year look back, man, it can be well worth the money.
Yeah, absolutely. I love that. I'm choosing taxes as one example. We could go through and talk about that with debt payoff. Okay, let me hire a debt payoff expert. Do we do a debt consolidation? Do we roll it all up into one lower interest? Do we do a snowball method? There's all these different ways to look at debt, all these different opinions on how to do that. But is that also taking into account everything else that you have going on? We could talk about that with retirement, with
Oh,
investing.
yeah.
Okay, well, I hired a financial advisor. Here's the challenge with the financial advisor. They work for some people, but not for most people. And the reason, and this is coming from a former financial advisor, I worked with Ameriprise Financial. Guess what we were taught as financial advisors? We were taught how to go out there and sell that company's products. We were out to go out there and sell whatever products that the broker that told us to go out there and sell. A lot of times, those products that we were taught how to go out there and sell were very high commissionable products, products that make the broker and the company a lot of money. Not always the best for the client, but a lot of times that's how that works. And so, on top of that, financial advisors tend to almost always have one way at looking at money, one way at looking at investing, one way at looking at things. So while they might be taking into account your retirement, your taxes, your investing, your debt, are they really knowing all the best strategies that you're able to do? And Brian, we talk about this all the time where we have clients that come to us that want to do infinite banking, but they're like, hey, listen, I have a financial advisor. I ran it by my financial advisor, and my financial advisor said, no, you can't do that. No, you got to do an IUL instead, or I got these better. And so what do? Well, we invite the advisor onto a call with us, and we start explaining to them, okay, here's what infinite banking is. Here's your client's financial situation. Here's why it makes all the sense in the world. And guess what these financial advisors do? They go, oh, well, no, but no, you guys don't know what you're doing. They have no rebuttal other than trying to just stumble through it. I mean, I don't know, Brian, if you want to share the one that Chris just did this with an advisor last week. Not, you don't have to name
Yeah.
names or anything, but
No,
just
all their names.
I
But yeah, so we had a client who they have a significant amount of capital, or, almost 2 million, and they want to run some of that through a policy, but they also want to have an advisor, handle a lot of that capital. But the purpose of why we're doing a policy with infinite banking is, first off, liquidity. They want to have liquidity. Two, they do not want to have risk. They want to take a good portion of their capital and not have it at risk. They want to have it protected, and they want to have it have guarantees and growth, and they want to have that legacy. It's not an investment. And when we got on the call with the advisor, he started kind of stumbling through his response because he was looking at infinite banking as an investment. That's not the purpose of infinite banking. What you use the policy for can be an investment, but the policy itself is not that. And he just could not get over that fact that it's not an investment. And he kept saying, well, you can go do an IUL and get a potentially better return. But what does the IUL, which is an indexed universal life, what does that introduce? Risk, which is exactly what the client does not want with his money. And he kept saying, no, you're going to make a better return, but you can also lose your money. And he could not get over the fact that the client did not want to have this in an investment. They wanted to have liquid as an opportunity fund. And it kept going in circles and in circles and in circles. And it was really frustrating. But the client understands that whole thing. They understand what infinite banking is going to do for them because they've been studying it. We've been teaching it, been working with them. So they like it, even if the advisor does not. So it was a pretty cordial conversation, I'll be honest. Usually they get a bit more heated, but this one was pretty tame compared to most. But the client is still more than excited to go do the infinite banking concept and also have the advisor work with their funds. But here's the thing. So when I was talking to the client, though, they realized, hey, if we take all of our capital and give it to the advisor, pretty much all of it is going to be in the at-risk bucket. That is crazy. Crazy. And so they want to make sure they're taking a good portion of this, putting it into a guaranteed bucket that is safe and protected. That's infinite banking. They also want to have a bucket where they have guaranteed income, which, by the way, is not an investment. Investments are not guaranteed income. And then the advisor will then take the rest of it, and that's going to be the investments at risk. So the client gets it. I'm very frustrated with that advisor because it feels like they're kind of combating against the client. But anyways, and so also you got to keep in mind when it comes to advisors, there are two different types you'll find typically out there that are certified as investment advisors. Well, the first one is an investment advisor. What's the second one? So Stevie, what's the second type of advisor that's typically certified?
financial planner.
That's usually in the investment side, but there's a certification out there we can get. It's called the retirement advisor.
Oh, right, right.
And you very, very rarely have actually, by the way, Stephen, I have not come across a client yet that is working with a retirement advisor. I very rarely ever see a retirement advisor. I always see the investment advisor.
hmm
So it's kind of interesting. I've been studying the retirement strategies recently, and man, it's very different than the investment advisors, the way that they approach it. So But we'll get into that here in another presentation for sure.
Yeah, and we'll talk more about that here in a minute,
Yeah.
retirement, because when you look at all, these different money problems, the cool thing about infinite banking is, yes, it can be used to pay down debt faster than without using it while still building wealth. Yes, there's a lot of tax advantages to having these policies. Yes, it's in a guaranteed bucket, so we don't have the risk that's involved with investing. Yes, it can provide incredible strategies using your policy later on for retirement and cash flow purposes. But at the same time, I'm not sitting here saying that, hey, infinite banking is the only thing you need to do for all of this. No, 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 no. See, the reason why I love infinite banking and what we teach is because it truly is the foundation for all five of these money problems. We can use this as a foundation, but not only is it going to help as a vehicle and a product, but it's more importantly going to get you to think. And you're going to start to go down these rabbit holes of, okay, well, I've been giving all my money to other people to control it, to invest for me, whether that's in a 401k or with an advisor or an index fund. But now that I'm learning about controlling my money, what if I can start investing on my own, controlling my own investments? What if I can get better returns by myself in a safer way? So it starts leading you to learn about these other strategies. Oh, hey, I can use my new investing strategies to start an LLC to now save a ton of money on taxes because now I can take all these deductions and I can use all this to now create cash flow for myself that I can later use for retirement. Like there's all these different things that it can open up your world to. And I think that's what I really, really love about this. So I'm not saying, guys, I want to be clear, IBC and what we're talking about right now is going to solve all these money problems with one strike, but it's going to get you thinking and open your mind to be able to do that. And yes, we will be able to help you solve these using infinite banking as well. Is that fair to say, Brian? We good?
Yeah. Oh yeah, 100%.
All right, cool. So moving on here, we have what we call the trap. We've been solving a system one piece at a time. So the real mistake, and it isn't picking the wrong fund or the wrong rate. The mistake is that we've been trained to treat every decision like it lives in its own little box. So picture a normal month. Monday, you meet your CPA. And the whole conversation is taxes. Wednesday, you're on the phone with a mortgage broker and it's all about rates. Friday, you sit with your financial advisor and it's all about returns. Three conversations, three professionals, three completely different vocabularies. And not one of them asked how Monday's decision affects Fridays or Wednesdays, because that was never their job. And I want to be fair to every one of these people because they're genuinely good at what they do. Your CPA is solving taxes, your broker solving financing, your advisor solving returns. They're each solving their piece perfectly. The problem is nobody's responsible for the whole picture. We've been hiring specialists to solve what is actually a systems problem, and a system can't be solved one box at a time. So when we look at what we have on the screen here, we have this, we had all the money problems before. Now we have the professionals that are supposed to be solving these problems. But again, are they working together? How can we have this stuff all come together for you, Brian?
Yep. Absolutely. Yeah, it's interesting that, I used to teach in financial education, and I had like a whole list of advisors that people could create their wealth team. It's crazy because most people are doing all these things in like a bubble. And you want to have these different people talking to each other if it makes sense. It doesn't always, but that's why Stephen said we hop on a call with an advisor. I've hopped on calls with CPAs, with attorneys, with real estate people for my clients, just to give them some different feedback of what we're doing, why we're doing this, all that kind of stuff. So professionals should work together, in my opinion.
Absolutely. All right. And then the reason, a system can't be solved, one box at a time really comes down to, a single sentence. And the single sentence that everything today hangs on, if you remember nothing else, remember this right now. Every financial decision creates consequences somewhere else. So remember that. The reason it can't be solved is because every financial decision creates consequences somewhere else. And if you're taking notes, write that down, Brian, because there's no such thing as a financial decision that happens in isolation. Drop a stone anywhere in a pond. Look at the ripples that come out from that. And the whole surface moves. Pay off debt and something happens to your liquidity. Move money into an account and something happens to your access. Buy a property and something happens to your borrowing power. So what do we mean by that, Brian? I mean, if I have let's say I'm making $10,000 a month. Okay. And at the end of the month, I pay all my bills and I have $2,000 left over that I can spend. But I have debt. So what are my choices there? I can pay the minimum of my debt to barely get by so I can have more money to access now, less money to be able to invest, less money for the future. I could pay more of that debt off, but then that money's gone. So now I have less liquidity to use for other things. Okay. If I move my money into a 401k, what happens then? I'm giving up
Yep.
control. If I want to
Yep.
later pull that money out before I'm retired, what happens? They're charging me a 10% penalty on it. If I move it into an IRA, same thing. If I move it into a brokerage account and put it into a stock, what if that stock loses 10%? And then I got to pull it out because I need the money. I'm losing access to it. So there's all these different examples of what goes on. If I buy a property, all of a sudden I put 20%, that money's gone. What does that look like? So
Yep.
then, really, which means the question we're all taught to ask, did this actually solve my money problem? It was always an incomplete question. The real question is, what did this cost me somewhere else? And did I actually mean to make that trade? Most of the time, nobody ever drew it up. So we could see that second part. We solved that first, but we never thought about that consequence.
Yeah, yeah, I like the way you said that. Is that it's the opportunity cost, all that kind of stuff. But a dollar into debt is a dollar you can't use tomorrow. Is the way I've always kind of looked at it. And yeah, a lot of people don't understand that. And we're taught, by the way, we are programmed mindset wise because this is all about mindset. As we grow and learn, we learn how money works, but is it the right way? And oftentimes it's not because we're learning it from you know prior generations that may not have known how money works. We're learning it from our educational system, which, by the way, does not teach you how money truly works. You're learning it from your employer, from the government, from Wall Street, all these kind of things. And so we're programmed, mindset wise, to think about money a certain way. It's why people find themselves in debt. We are taught that debt is how you live life. Like, I remember my first big debt was a mortgage. Well, if I had realized what was going on, I would not have got that mortgage. I would have got an asset with the mortgage instead of a liability. And it took me quite a while, I'll be honest, Stephen, to change my mindset around money. And it's still a challenge to this day. It's always, it's a constant lesson there. But yeah.
Yeah, and the consequences really do ripple through the rest of your financial life.
Ooh,
Mm. So if
yes.
you really want to get the most out of today, hopefully so far you're starting to write some of this stuff down. You're thinking about it, but we want to start writing stuff down. We want to start actually putting it on paper because our thoughts are great. Thinking is great, but we need to actually start implementing and taking some action. The first step there is just understanding where we are. So right now, so far, we've talked about debts. Hopefully, you're thinking about what debts do I have? If you want to take it a step further, write down what those debts are. Do you have credit cards? Do you have auto loans? Do you have student loans? What are the balances? What are the minimum payments? What are the interest rates? We want to know this stuff. This is all things that are going to help us recognize. I mean, Brian, how many times do you talk to a client and you're like, okay, I want you to write down your debts. And then the next meeting, we're going to go through those. They come back to that next meeting. They're like, Brian, I never realized how much money I had going out every month in my debts, how much interest I was actually paying every single month. I mean, do we hear that all the time, right?
Yeah, I hear it all the time where they'll fill the debt sheet, and and they'll have said, "Hey, Brian, I have a $2,000 disposable income at the end of each month." They do the thing, and they're saying, "Oh, it's not 2,000, it's like 500." Or
Yeah.
sometimes it's more. Typically not, though. I'll be honest. It's usually a lot less than what they thought because they're just not tracking the money. And then what happens is I call it cost creep. Things that cost money. You have this creep in your budget. And what that means is, like, if you get a pay raise, what happens to that pay raise for most people? It just gets absorbed into your spending
Oh,
because you're
yeah.
not tracking it, and it's just that cost creep. And I had a client do this here recently, and this is kind of funny because they're saying, "Hey, Brian, and this is once again mindset." They said, "I can't do that premium." I said, "Well," and I said, "First off, I want you to change what you just said. Don't say I can't or it's not possible." I said, "What I want you to say here is how can I do this? How can I make this work with my current budget?" Ask questions that you can then answer because I can't is there's no answer to that. It's a statement. Instead, phrase it as questions. And so I had them go and I said, what do I want you to do right now is just open up a separate checking account and I want you to transfer, I think it was 500 per month into that checking account from your income. So your regular checking account. They said, "Well, why?" And I said, "Just watch what happens." And they did it for a few months. What happened was is their spending adjusted to accommodate that expense, right? And then I said, well, what if that was your premium on a policy? And they're like, oh my gosh, then they got what I meant. And it's just that we typically will adjust our spending for our expenses, but we're not controlling the expenses. So when you start
Yeah.
controlling your cash flow, start controlling your budget and stuff, man, all of a sudden things actually can get a lot easier. But most people
Yes.
don't do that.
So write that down. What's your income? What's your take home? What's your expenses each month? Start tracking that stuff. It goes right along with debt. So those of you that are serious and taking action right now, start writing that down. And we're going to have you continue to write things down to prepare you to make a true financial change in your lives. So just to
Yeah.
kind of concrete this, Brian, and we're going to get into a little more detail on this next slide, because it is easy on these things just to kind of nod along or maybe doing something in the background and you're missing it. So let's dive in, a little bit deeper here on what that looks like. So, every fix creates a second effect. I mean, Brian, how many times, not only with the debt stuff, but how many times do you have somebody on the phone that's really excited? They're like, Brian, I just got a big bonus at work, or I got this money from somewhere, something happened, whatever. And they're like, so I used it and I paid off all my debt and I'm debt free now. And they're all excited. But then you're like, okay, well, now what? That's great
Yeah.
that you're debt free, but now that money's gone. You're never going to get that money back for the rest of your life. You're debt free. Awesome. But how has that truly changed your life? How has that affected things? I mean, do you get that all the time?
Yeah, we do, and because I get that question. Say, Brian, I've got some money. Should I pay off my debts first, then do infinite banking, or do infinite banking first? And there is no right or wrong answer to that question. The correct answer or the right answer is whatever makes the most sense for you as the client and helps you accomplish your goals. To be honest, so there's different ways to do it, but the point is to work through the answer to find out what is the best fit for what you're trying to accomplish. Because I do have clients where, guess what? You're going to have to pay the debts off first. You're going to have to because there's other things going on in their life, and it's like you've got to get rid of these debts. And I'll give you an example. A client was upside down every month, so they were making 10,000 and spending about almost 12,000, by the way. And they're like, hey, I'm going to run out of money, and they made really good money, by the way, but they're going to run out of credit and all that kind of stuff in about 8 months, and they were freaking out. But they had never stopped and asked, where is my money going, and how do I recapture it? So this client was paying a little over $1,000 a month into a 401k. All right. Now they were a ways away from retirement, but I asked them, I said, does funding your retirement account right now matter if you're going to go bankrupt in 8 months? They're like, oh, never thought of it that way. Okay. Then I said, okay, what kind of cars do you have? Well, they have two cars. 70 grand for one and 50 grand for another one. Those payments were a little over $2,000 per month. And I'm like, where do you drive? Well, I drive 10 miles to my office and that's where they work. And I'm like, if you're going to go bankrupt in 8 months, do you need a $70,000 car? So what they ended up realizing is they were spending money that they shouldn't be spending it. And so they redid their whole budget, stopped their 401k for a while. And then all of a sudden their debts started going down really fast. And all of a sudden they were cash positive every month. But they had just never had anybody ask them that question: is where's your money going and why is it going there? Is that the best place for it?
Yeah, it's a
So,
beautiful thing, man. That's why I love what we
yeah,
do here at Money School. But if you look at this list on the screen right here, Brian, every one of these is smart, it's mainstream, it's responsible advice. Nobody's going to argue with them, but watch the second column. Look at that right-hand
yeah,
column. That's the one that nobody ever draws for you. So paying off debt is good, right? Yeah. But every extra dollar you send to the lender is a dollar you can't get back. You just traded liquidity for it. Invest aggressively, great for growth, but you also just gave up accessibility. That's those monies are now tied to a market and a timeline. Maybe you buy another rental. Now you own a great asset and you just reduced your borrowing, but you just reduced your borrowing capacity for the next opportunity. Maybe you're maxing out retirement accounts, like you just said, Brian. Well, you cut this year's tax and you just reduced your flexibility. That's money that's locked up now for decades. So hear me clearly, because this is important. I am not saying any of these are wrong. Do you want to make that clear? Any one of them might be exactly right for your life. The point was never whether they're right. The point is that every single one of these creates a second effect. And if you can't see the second column, you're making the trade blind. You always want to understand what that looks like. So take a look at this screen and just understand, by doing something, we're always moving on and giving up something else, or it does create that ripple effect. So here's why we keep missing that second column, and it's not our fault. So why do we keep missing that second column? It's not because we're careless. It's because of how these decisions are built. Think of an iceberg. Take the classic move, maxing out a retirement account. The first order effect sits right above the waterline where everybody can see it. Your taxable income drops this year. You get a refund. It feels like a win. That's the part that gets sold to you. But look below the waterline. That's where the mass actually is. You guys know that meme, right? Where you see the ice cube and really all the details, all that tea, all that gossip. That's that the below there under the water line. That's exactly what we're talking about with your money. That same money is now locked up until a certain age. It's penalized if you touch it early, and it gets taxed on the way out at a tax rate that nobody, not me, not your advisor, not anyone, can actually predict 30 years from now. All of that is real and all of that is invisible in the moment you make that decision to fund that account. That's the pattern for almost every financial move. It's sold to you on the first effect, the visible tip, but the real cost is sitting quietly below the surface. Connected thinking is simply the habit of looking under the waterline before you decide.
I like that.
So if every decision has a hidden second effect, the fix isn't the better answer, it's a better question. The answer isn't to find a smarter answer, it's to ask a better question. And connected thinking is really just one better question asked three different ways. So think about this. Instead of what's the best investment, ask the question, what happens everywhere else in my life if I do this? That one shift pulls the whole system into view. Really think about that, Brian. It's not what's the best investment, it's what happens everywhere else in my life if I was to do this. I mean, that's mind-blowing to me right there.
Yeah.
Instead of should I pay off my debt, ask yourself, what does that do to my liquidity? Now you're seeing the second column before you act, not after. Or one more example, instead of should I invest, ask what does that do to my financing flexibility? Same money, but now you're deciding with your own eyes, with your eyes open. So notice what these questions all have in common. None of them can be answered inside a single box. Each one forces you to look at the whole system all at once. That's the entire skill. It's not complicated. It's just a habit almost nobody was taught. And that's very, very, very similar to what the infinite banking concept is. We've been taught one way to look at money, one way to invest, one way to look at retirement in the future and taxes and debts and everything else. And the infinite banking concept simply says, hey, change one thing, where your money goes first. Create your own banking system, stop bleeding that interest, and that can change everything for you for the future.
Yeah.
So looking at these columns, just kind of highlighting that and what that looks like. So is this opening anybody's eyes so far? Is anybody saying, man, I've never really thought about it that way before? Is this connecting with anybody so far? Just curious. Give me some feedback over in the chat box. I'd love to see
Yeah,
it.
for sure. I mean,
Um,
I wish I had known this stuff, years ago when I was investing into a lot of different asset classes and just didn't have these questions being asked, and ended up losing quite a bit of that capital, because I didn't know what I was doing, and I didn't know when I was asking these things.
yeah. So if we are going to ask what happens everywhere else, we have to also agree on what everywhere else actually is. So if we're going to ask what happens everywhere else, we have to agree on what is everywhere else even is, Brian? Like, what does that even mean? And so the answer that ties this whole thing together, debts, taxes, retirement, cash flow, those aren't really the things you're managing. Those are just categories, labels on a door. Underneath every one of them is the exact same thing. Your capital, your money. And what
Yeah.
actually matters about your capital is four things. Write this down. Four things really matter about your money, about your capital. Number one, where it sits. Number one, how long it's gone. Number three, who controls it while it's gone. And number four, whether it can still be working while it does its job. So I'm going to read those one more time. Your capital, your money, four things: where it sits, how long it's gone, who controls it while it's gone, and can it still be working for you while it's doing that job? So if we're looking at the screen here, the categories are just rooms sitting on top of one foundation. The foundation is capital. So if you spend your life rearranging the rooms, a little less debt here, a little more retirement there, you're just moving furniture around. But the moment you understand the capital underneath all of it, the categories finally start to connect. Capital is the common denominator behind every financial decision that you'll make. So once you see capital as the thread, watch what happens to everything that we study. We've been trained to treat these like 9 separate subjects, 9 different classes, 9 different experts, 9 different problems to knock out one at a time. But look at the wheel. Every one of them is connected to the same center, your capital, which means every real financial decision you make doesn't touch just one of these. It touches several of them at the exact same time. Pay off the mortgage and you just move debt, cash flow, liquidity, and financing all at once. Max the retirement account and you've touched taxes, retirement, access, and flexibility in the same move. You are never making a debt decision or a tax decision. You are making a capital decision that rippled across the whole entire wheel. You just couldn't see all the spokes before.
Yep.
Give you guys a minute to kind of look at that example.
Yeah.
Write that down. Think to yourselves, what am I doing? Is this all connected in my life? What are some things I could start thinking about doing differently? And again, we're going to work with you. We're going to mentor you. We're going to coach you. We're going to look at all of this stuff together and how we can incorporate this banking system, this privatized banking system, life insurance done differently into your financial life. We got 9 weeks of this coming, guys. 9 weeks of this. These are the 9 areas that we're going to be talking about starting today over the 9 weeks on this wealth webinar series. So the moment you see this wheel, something clicks that you're never going to be able to unclick. And I hear this from clients all the time. Once I learned about infinite banking, I can't believe I never learned this earlier. I'm never going to go back to looking at money the same, the way money moves, the way money flows, the way my financial situation is. Why was I never taught this before? I wish I could have started sooner. I wish I would have known about this. I mean, Brian, is that the number one thing you hear from people? I know it is for me.
The most common response we get when people start to see infinite banking and realize what it does is, I wish I had started this 20 years ago. Very, very common. So yes, and I'm the same way, by the way. I wish I'd started this 20 years ago. When I first heard about this, I wish I had known the knowledge I had today. But yeah, so
cool. And so the moment you kind of see this wheel, something clicks. That's when we want to really start talking with you. And so I wanted to just share, I know we're about an hour and a lot of people have to hop off at the top of the hour. So for anybody that is looking to talk with us, work with Brian, work with one of our money mentors about your situation, ask more specific questions. I know we're more broad right now, and we're going to be talking about this over the next couple months on Wealth Webinar. But I do want to give everyone an opportunity to be able to meet with our mentors and start getting that coaching, start getting that mentorship, start understanding your situation.
There's actually a couple questions I want to make sure we address really quick. Someone asked a question, can you roll, and these are off topic, on topic, doesn't really matter. Can you roll an annuity into whole life? Not directly, no, you cannot. You can roll a 401k, IRA, 403b, those kind of things, even a TSP, certain kinds. Those you can roll into an annuity, by the way, because it is qualified without any tax consequences, but not directly into whole life insurance. And then another question that's on topic is, someone's asking, as an individual, how do you bring together your wealth advising team? If we have these separate professionals, what would be some strategies to facilitate meetings where everyone is on the same page? So here's what I do. Whenever you have a conversation with one of those individuals, right, just say or tell them, hey, I've got other advisors I'm working with. Here's what they are. Please let me know when it would make sense for you to talk to them. So I put the responsibility onto the professional, by the way, because they're going to know. But if you're the one that says, hey, I want you to be aware I have other professionals, here's who they are, let me know if you want to speak to them, that's how you're going to do it, because you might not know yet, but they should. Because if you, like when I first did this to someone, to an advisor, he was like, dude, that's awesome. Yes. When we talk about this concept or this strategy, we're going to want to bring in this person. They all know. So just put it on them and have them let you know.
Yeah, and we do have
Yeah.
specialists also, Brian, that, understand everything that we teach, the type of financial systems and strategies that we talk about. And so it's always good to get a second opinion, in my opinion, also usually. And so,
Mhm.
maybe you've been working with somebody on taxes for a while. Maybe you feel like they're missing stuff, something like that. I mean, we can connect you with a few that we work with our clients with that understand all of this. They'll give you a second opinion. Almost all of them will do free consultations. So there's different ways to look at this also that we can definitely connect you. So great,
Yeah.
great.
Okay. Yeah. So Christian Morrow, he's asking, is there a tax strategist that understands infinite banking and trucking?
Yep.
I don't know about the trucking part of it, but definitely the infinite banking side. Yes, that's going to be Brent Carlson. And
He's
then
really
Christian,
familiar with the trucking industry as well. I do know that
is he?
yep.
Oh, sweet. Yeah, I didn't know that. That's awesome. And then Christian saying here also, if yourself cannot be insured, can you insure someone else? Yes, within limitations, there is the ability to insure someone else, but yes, just with some limitations. And then he's asking, what are some health reasons you would not be insurable? So, recent heart attacks, recent cancer, height and weight ratio, which is obviously obesity, can be a big one. Chronic illnesses, diabetes with insulin, high cholesterol, high blood pressure that's not being mitigated, those kind of things. Yeah.
All right. So the whole point of today is really, the shift. And I hope you're feeling right now kind of that shift in your own brains. Like, okay, I'm starting to get that these ripples happen, that there's kind of better ways to look and think about all of this. So the moment you stop seeing debt and taxes and retirement as separate errands on a to-do list, you start seeing one connected system. And every decision you make starts to change. So you stop doing the thing that quietly keeps people stuck and you start asking automatically what a choice does everywhere else, what a choice does everywhere else. So it almost starts to become like, in Infinite Banking, we talk about this video called the backwards bicycle.
Hmm.
And if you haven't seen it, it's really cool. Go on YouTube, type in the backwards bicycle. But it's all about this guy. He takes a bicycle and he reverses the way the handlebars work. So we've all learned our entire lives to ride a bicycle by moving the handlebars, and that's what lets us lean and steer and balance. But when you change the one operation of how the handlebars work, nobody can ride the bicycle. You fall over. It's embedded in your brain. And that's how people look at money in a lot of cases. And so we just automatically revert to the old way so often. And so that's why it's important to watch these YouTube, continue on this 9-week journey with us on Wealth Webinar, because over time, if it hasn't happened already, you're going to have that mindset shift occur. And once it happens, guess what? Well, your automatic way of thinking is going to start being the new way, the way that has been proven to work by successful people for hundreds of years at this point. And so that's our goal with you with all of this. So that habit actually has a name, and it's called connected thinking. And I'd argue it's the operating system your money has been missing this entire time. So notice, and this matters, the operating system is not a product. Nobody can sell it to you. It's a way of thinking, it's a lens. Once you've got the lens, you can look at any account, any strategy, any decision, and finally see how it fits the whole picture. So, what this means is the problem was never you, it was the questions you were handed. So, you have not been making bad decisions. If you are one of those at the beginning of the call that said, hey, I'm working hard, I feel like I'm doing everything right, but I'm still have a bunch of debt, I'm still running out the money each at the end of each month. It's not necessarily bad decisions you've made. It's looking back at everything we've covered, paying off debts, maxing retirement, buying properties. Every one of those choices was defensible on its own. Smart people made every one of them. The gap was never your discipline. It was never your intelligence. It's simply that nobody ever taught you to ask what each decision does to the entire system. You were handed incomplete questions, so you got incomplete answers. That's it. And that's genuinely good news because questions are something you can change starting right now today. You don't need to have it done perfectly. You don't need to start. You don't need to start over. You just need to start asking the fuller questions. What does this do everywhere else? And everything downstream of that begins to change. And you don't even have to do it on your own. I've been talking about it. We're here for you. We're here to support you. I learned many years ago, if I can educate somebody and I can have them take action and eliminate fear. What is fear? The fear of the unknown, fear of what's next, fear of what's going to happen. That's all fear is not knowing what's next. That's it. That's all fear is. So if we can educate you, it starts eroding that fear. If we can show you, it starts eroding that fear. If we can hold your hand and give you the support and the mentorship you need, that's going to start eliminating that fear. And once you eliminate fear in your life, what happens? You can go out there and accomplish anything. And I truly, truly, truly believe that is true for every single person on here. Why? Because I've seen it happen with our clients time and time and time and time again over the years. We have an event coming up in Buffalo, New York. It's something we haven't done in probably 2 years or so, but we have a small group of about 25 of our clients are getting together 3 days up at the Buffalo headquarters, BYOB headquarters. And Chris Naugle, our team, our inner circle, we're going to spend 3 days together going in deep on financial situations, on businesses, on what's going on with their investments, going on with our clients' money. And we're going to look at this overall approach, what we've been talking about today, and we're going to go real in depth with everybody on that. And so I know that this works because those people that attend these events that we work with, guess what? Every single one of them was scared when they started. They had fear of doing something differently, but every one of them will tell you, man, once I followed what you guys taught, once I followed the system you created, there's no reason why I wouldn't have done this. And that's why I said before, I wish I would have learned this stuff sooner. I wish I would have taken action sooner. So you haven't been making those bad decisions. It's just incomplete questions. So where does this go from here? And to answer the question you've been feeling since the trade-off table, every fix we looked at forced you to pick. You could grow a dollar or keep it within reach or protect it, but never all three at the same time. And that's the trade-off that keeps people stuck. So here's the real question. What if a single dollar could do all three at the same time? What if a single dollar could grow, stay reachable, and stay protected all at once? Because there's a strategy built to do exactly that. And you may have heard me talking about it today. It's called the infinite banking concept, otherwise known as IBC, otherwise known as becoming your own banker, otherwise known as life insurance done differently. But that's exactly what the infinite banking concept is. It's having the same dollar, instead of getting ripped three different directions, it's allowing it to do all three at the exact same time. Now, I want to be very clear about what it is and isn't, though. It's not a secret account, it's not some gimmick, and it's nothing new. It's built on one of the oldest, most boring, most proven financial tools there is, a dividend-paying whole life insurance company from a mutually owned life insurance company. Now, I mentioned before, we are life insurance agents. We're licensed in all 50 states to be able to teach the infinite banking concept and help you implement it. Why? Because it is built on that whole life chassis. So we need to use that system now. Because we're independent agents, here's where it gets even better. Number one, the reason there's no sale here is because we never charge you a dime for any of this. The strategy calls, solving your money problem, helping you implement this. We get paid by the insurance carriers. They actually pay us to go out here and teach this stuff and to open up policies with these carriers. Now we work with several different carriers. Why do we do that? Well, because Brian's going to sit down and talk with you about all of that. He's going to understand the best way to create your policy, the best policy for you. But guess what? Not all carriers offer the same products and the same solutions. So Brian's going to create the perfect product with the perfect carrier that serves your individual and unique money problem or your goals. And so we're able to work with several different carriers to match exactly who you are as an individual. Now, the difference in one of these boring old whole life policies, also in what we do, is how it's used. See, we're not building this specifically for the death benefit. Is there a death benefit there? And will your loved ones receive it, your beneficiaries? Absolutely. And as I get older, that death benefit gets more and more important to me. But we have clients that have beneficiaries that are charities or longtime family friends and things like that. But they're using infinite banking because of what a powerful financial tool and strategy it is for their lives today. So the death benefit's there. It's what the whole life is, but it's what makes us different. We're not building on that. We're building a living system for your capital while you're alive today. And for the rest of today, I'm going to show you how it actually works. The real building blocks, not hype. No hype, no gimmick. And I truly believe, Brian, this is where we lose people is the way that infinite banking gets pitched sometimes. I
Hmm.
feel like people do like kind of, and we do it all the time too. Like it's some secret thing that you got to be taught, and only like the exclusive people know about it and stuff like that. I mean, it's kind of true because it's why people say, "Why was I never taught this before?" But some of the wealthiest families in America for over 200 years have used whole life in this way. The Rockefellers, the Vanderpumps, college football coaches and business professionals and executives and bankers, and I mean, I could go on and on and on with it. I mean, so it's nothing that's crazy. It's just it's the way that it's presented. So to me, that's what we're going to talk about from this point forward, Brian, is what
Yeah.
this means and
Yeah,
how
no, I
we.
agree 100%. I mean, when I first learned about this, it wasn't as mainstream as it is today. And when I started studying it, guess who I was learning it from? Very, very successful, highly wealthy people. And I was able to get in, kind of the back door a little bit and learn what they were doing. And this was one of the things that they are doing. So why some advisors say, oh, it's only for the wealthy, it's because historically they're the ones that have done it the most because they have a different level of advisors, and I'm talking historically, by the way, not currently today, but they have a different level of advisors. But with social media and what we're doing here is we're bringing that knowledge to the public, the average person. So everybody can do this now, or well, not everybody, but most people can now do this. So it definitely has changed.
I love it, Brian. And somebody asked over in the comments. I heard velocity banking the other
Yeah.
day. It's the same concept. So it's not velocity banking, and is using your home equity in some type of HELOC, first lien position mortgage, tapping into the equity of your home, though, and creating a system of flowing that money through using the equity in your home. Now, the infinite banking concept is using savings, using assets, using your money today, like you see on screen right here, instead of having it go three different directions, using it in this policy. Now, here's the cool thing though is we can use velocity banking and infinite banking together. And Brian, you do a lot of that. I mean, do you want to add anything to that?
Yeah, I mean, velocity banking, I mean, is a phenomenal concept, but there's just think of things like infinite banking, velocity banking. All they are is a tool. But guess what? I mean, you got to have the right tool for the job. If you're trying to install a window, I mean, you need tools for that. If you're trying to, nail a board, well, a screwdriver is not going to help you put a nail into a board. You got to have the right tool, and but they can all work together. Like that's the cool thing is that if you have a toolbox with different tools, that's really what your finances should look like. So velocity can work with infinite banking or separately, but they're all really good strategies. Yeah, vortex banking. Yeah, I've heard that before too. That term. Yeah, I can't remember who says that.
Yeah, a lot of people will kind of take these concepts, velocity banking, infinite banking, and they'll come up with like their own like odd little like branded terms, and then they'll sell it as like a system for something that you could get educated on and do completely for free. So a lot of times it's kind of like a sales gimmick, a marketing gimmick, things like that. But we started this company 7 years ago with the idea we're going to give our best stuff away for free, and we're never going to sell when we do the infinite banking concept for our clients. And that's what we do as a company here at BYOB Money School. So just be weary of some of those more expensive programs that are kind of charging you to learn a lot of this stuff. Just understand that. And somebody mentioned IULs over in the chat. You should never, ever in a million years use an IUL for infinite banking. There is a rare, small group of people where IULs can make sense for later on retirement planning, but typically IULs are not a good product for 98% of people. They're very high commissionable products. They're easy to sell, and that's why a lot of advisors push them. And we have tons and tons of videos on explaining why you should never use IUL over whole life, especially when it comes to infinite banking. Happy to share those with you, Jason. Just be very careful with anybody trying to pitch you on anything IUL related.
And
Uh,
Kevin, to answer your kind of velocity banking thing, velocity banking is mainly focused on getting rid of debt. And velocity banking is typically not a lifelong strategy. It's a temporary strategy for a temporary reason. Getting rid of debt is the main reason, whereas infinite banking is a lifelong strategy. Permanent is permanent.
All right, cool. Let's get back to infinite banking though, and how we can change this and what these whole life policies, because once you understand what this whole life policy can do for you and how it works with the infinite bank, you're never going to think about IUL again anyways. You're going to want those guarantees. You're going to want that foundation for your life. And at the end of the day, that's what we're doing. We're solving your money problem. We're not trying to chase returns and take on risk with this policy. And that's exactly what IULs tend to do. So let's open this up, Brian, and see how these things are built a little bit. All right.
Yep, let's do it.
So an infinite banking policy is funded in a couple different ways. First off, there's the base premium. And the piece most people have never heard of, which is called the paid up additions rider. You'll hear us refer to it as PUAs, paid up additions. So the PUA rider lets you pour extra money into the policy above the base premium. And that money turns into usable cash value almost immediately. Base is the engine of the whole life policy. PUA is the accelerator. A lot of times, I live in South Florida, so I watch, as a kid, I grew up watching the NASA shoot space shuttles up into space. These days, I watch Elon Musk and SpaceX shoot rockets up into space. But a great way to look at it is a space shuttle. You have the main, vehicle itself where the astronauts are inside of, and it goes up into space. But how do they get up into space? Well, it's got the rocket boosters on that thing. So those rocket boosters are on there to get it out of like the high drag, the gravity that's in the Earth's atmosphere. So those rocket boosters get that rocket moving, get it going, get it up into space. But once it gets up into space, what happens? Well, it gets up into the Earth's orbit. There's not all the gravitational pull and all the drag on it. So what happens with those rocket boosters? Well, they fall off. They're no longer needed. And that's a great way that we look at these policies. The base is the base premium of that policy is the actual rocket itself. The PUAs are those rocket boosters that get that whole life policy into this efficiency period where it's growing like crazy for you. And it does all the stuff that we're going to talk about, but then they can drop off because why? They're no longer needed. And so it's a great example like that. So another way to look at it, if you look at the bar here, a policy designed for banking is deliberately weighted heavily towards PUAs, sometimes 3/4 PUA to 1/4 base, because that's what gives you high early cash value when you actually want to use it. There's a ceiling, though. The IRS sets a limit, and if you overfund past a certain limit, the policy becomes what's called a MEC, or a modified endowment contract, and you lose all the tax advantages of the whole life policy. So one of our jobs is to really help look at this and build these policies really to that MEC limit. And that's going to give you the most efficiency, cash value immediately, keeping that a whole life policy, keeping it tax-free growth, tax-free loans, tax-free to your beneficiary, and all the protections that a whole life policy provides. So this is designed right up to that line, but never past it. And that's why the design of these matters so much.
Yeah, PUAs are, and I try to explain PUAs to people because they are very important, but unfortunately, a lot of, and by the way, even other agents don't understand how powerful PUAs can be. And so I tend to try to make sure that the client understands how these things function, how they exist, and where they are in your policy, because there's more than one. But they're the thing that really makes infinite banking truly infinite banking.
Absolutely. Yeah, we'll get more into it. So both engines, the base and the PUA, feed one number, and it's the number that matters most, your cash value. This is the living, usable heart of this whole entire thing. So the cash value is simply the part of the policy you can actually get your hands on and use. And look at what it does. It grows every single year, really every single day. Part of that growth is contractually guaranteed. And on top of that, there are potential dividends, which are not guaranteed, but which strong mutual companies have paid for over 100 years. And all of that growth is completely tax deferred. So when I mentioned before, the insurance carriers that we work with for these policies matter, it's because of that right there. We want to work with companies that have these strong dividends that have been paid for well over 100 years consistently every single year, that have these strong financials that allow them to do that. So now here's the mechanism that makes it usable, the policy loan. When you want your money, you don't withdraw it and stop the growth. You take a loan. The insurance company hands you cash and uses your cash value as the collateral. And here's the part that surprises people. In many of these designs, your full cash value keeps on growing the entire time as if you never touched a dollar of it. I do have to be straight with you though. Those loans do charge interest. And if you take a loan and never pay it back, it comes out of the death benefit. Nothing's free, but it's your money on your terms and your decision on how that works. Anything on that, Brian?
Yep. Yeah, and actually, Deborah asked a question here about, hey, if you start a policy and put in a $50,000 paid up addition, you can access it within 30 days, which, by the way, is very different than other types of like even IULs, by the way. But yeah, within 30 days, you can access right around 95% of that. Well, no, between 85 and 90% you can access right away. So yeah.
Yeah, absolutely. And the other thing is when we're talking about kind of funding these policies, the base, the premium, the PUA, you are in charge of that as well. So when you meet with Brian, your money mentor, you guys are going to talk about your situation. What's the right amount to put into this policy? It's completely up to you. We'll talk about what would work for your situation. We'll talk about the maximum amount you can put in. We'll talk about the minimum amount you should put in. We could talk about the flexibility over the years on how much more you can get in or how much less you can put in if financial conditions change. But these are very, very flexible. The amount that you put in is very, very flexible. And on top of that, a lot of our clients will say, listen, I got $50,000. I got $100,000. I have whatever right now that I want to put into this thing, but I don't want to put that much in every year. I'm comfortable putting 10, 15, 20 grand a year. I'm comfortable putting 3 to 5,000 a year, whatever. But I got this larger amount up front today that I want to get in there. Can I do that? Absolutely. And almost all of that goes towards those PUAs, which Brian just said is accessible within 30 days to be able to take a loan right back out. And just re-emphasizing what this slide says, when we pull that money right back out, it comes out in the form of the loan, allowing that entire dumping amount that you put in there to sit in there growing tax-free, uninterrupted, compounding for the rest of your life, even when you pull the money out to buy a car, to invest, to pay out debt, or whatever the case might be. Yep. So now here's the part that turns a policy into a personal banking system. So watch the reservoir on the screen. Every premium you pay drops into your available cash value and raises the level. That's a deposit into your new banking system. So one of the things we often say is, I don't want you to think of this base and PUA as a premium. I want you to think of it as a deposit, because we're not doing this for the whole life policy premium. We're doing this because it is your new banking system. And when we bank, what do? We put deposits into our banking systems. So it's one of those like mindset things. When you stop thinking of it as a premium, a bill, an expense, and start looking as a deposit into your family's banking system, it's going to make a big difference. So when life happens, you need a car, a great opportunity shows up, a bill lands, you don't drain your savings account and you don't beg a lender for that money. You take a policy loan from your own bank, it pulls from that balance and that orange arrow that's going out. But here's the magic. And this is the whole point. When you pay that loan back, the repayment flows right back into that reservoir and raises the level again. So think about what's coming in to this well. Your premiums are coming in and your loan repayments are coming in. Both raise it, which means unlike a regular bank account that empties every time you spend, the balance you can pull from doesn't shrink over the years. It actually keeps rising and rising and rising. Every deposit and every repayment increases, which you can borrow again and again and again. Next time, bigger than the last time. You become the bank and the borrower, and the profit that was used to leak out to a lender before now stays within your own banking system. And a lot of times this is kind of that aha moment, Brian. People are like, okay, so I'm putting the money in. When I pull it out, it's still growing more and more and more every single year. I don't have to go pay stuff off and borrow from a bank or drain my savings account. I can borrow from myself. Look at what a single dollar inside the system is actually doing, all at the same time. Remember the trade-off that started us today. Grow it or keep it reachable or protect it. You have to pick one. Watch that trade-off dissolve. The same dollar is growing and it keeps growing even while it's loaned out and working somewhere else. That same dollar is reachable. You can get to it when life happens without a penalty or permission. And that same dollar is protected the entire time. Growing, reachable, protected, $1, 3 jobs all at once. That's not a better answer to one question. That's a tool built to respect the whole entire system. Exactly the connected thinking we spent today learning to see. And let me be really clear about one thing, because I never want to oversell this. It does not replace your 401k. It doesn't replace your home or your home equity. It doesn't replace your checking account. Those are all still exist and they're still needed and they still matter. What it does is give you capital. It gives your capital a home base, a foundation, one place that finally thinks in connections instead of separate boxes. And we see that on the screen here. We see our money is now going to all three different places. It's growing, it's reachable, it's protected. That I want to know before, to make sure that this all works, and we want to be honest about this, the difference between this working and this disappointing is the design. It's how it's all set up from the start. Whole life insurance has been around forever. A policy built for banking looks almost nothing like the whole life policy someone might sell you for a big death benefit. And we do these trainings all the time as well, where we compare a standard whole life policy that a typical life insurance would create for somebody versus what we create to create a banking system for somebody for the infinite banking concept. It's engineered for high early cash value with the right balance of base to PUA. It's structured around your goals, not around a commission. It's built well. It does everything we described today. If it's built poorly, it frustrates people. Same product name, completely different results. So the next step is a design conversation. We look at your numbers, we look at your goals, we look at your money problems, we look at what we're solving, and we figure out whether a structure like this even makes sense for you. No pressure, nothing getting pushed. And I have to say clearly, nothing today was financial, tax, or insurance advice. It's education. Guarantees depend on the company. Dividends aren't guaranteed. Loans carry interest. And this should always be done with a licensed professional who structured it correctly. That's exactly what our team is here for. If that conversation is useful to you, take the step. And if today just changed how you think about money, that's a real win also. So before we go, the one sentence I hope you carry out with you from here: every financial decision creates consequences somewhere else. That's the shift. You can see the whole system now. You'll never unsee these connections. And today, you also saw something most people never do, a tool actually built to work with that system, where $1 can grow, stay within reach, and stay protected all at the same time. So here's the truth about today. You didn't need a better answer. You've been handed answers your whole life. You needed a better question, and now you have one, plus a look at a system that can hold more than one answer at a time. That's where we go from here. With that said, Brian, let's answer any questions that people have
Yeah,
right
yeah,
now.
yeah. Get those questions in there. If you guys have anything? Yeah. Christian Gray said he goes, yeah, I got tricked into an IUL for infinite banking. Yeah, that happens a lot. By the way, they'll use infinite banking as the hook, and then kind of do a bait and switch with an IUL, and all of a sudden, years later, you found out like I'm actually losing money, or I'm not going to get it back. So yeah, it happens quite a bit, unfortunately. Um, and then someone asks, Christian asked, should you transfer an IRA to a policy? That's a great question. We get that one quite a bit. Hey, can I transfer a 401k into a policy, an IRA into a policy? Not directly, no, because an IRA, 401k, 403b, TSP, all those are considered qualified retirement plans or accounts, so QRAs, QRPs. And in whole life is actually a private strategy, and it's not considered a qualified account, so you cannot roll it directly into a policy. You can do it indirectly, which means you got to permanently withdraw from the IRA, taxes and potential penalties, keep that in mind, and then roll it into the policy if it makes sense. But that's something that we can always go through on a call to see if that makes sense or not, because I'll be honest here right now. I'm going to be very honest with you. If it's not a fit, I'm going to say so, because infinite banking and we do annuities, other things, they're not going to be a fit for everybody, because you want to make sure that it makes sense to you though as well.
Yeah, it's something we're doing for like retirement planning right now. If you're a little bit older, retirement age, looking at that IRA, we can roll that thing just as like a quick example, like roll it into a SPIA and then use those and correct me if I'm wrong with the terms, I believe it's a SPIA, Brian, but roll that money coming from the annuity into a, let's say, a 20 pay whole life policy for you that you can use for infinite banking. So we're coming up with some really interesting strategies right now of rolling money from some of these qualified accounts, because people have been I don't want to say duped, but people have been their whole lives, like we started this thing with, like, put money in these IRAs, give up control of it, put in these qualified accounts, but now what? So how can we move that money without getting too overly, penalized through taxes and penalties into better vehicles that can fund these kinds of things? So I think next week we're going to do a quick little example of what that looks like.
Yeah, yeah, for sure. So, 'cause as an example, depends on your goals, though. That's one thing you got. It depends on your goals, what you're trying to accomplish. But a lot of people, they have a lot of their retirement monies. Once again, go back through this presentation, what we're talking about. They have it in a 401k or something like that, where you give up liquidity, you give up control, you give up certainty around the future value of that money. You have risk, all those kind of things, and then you go into retirement, and it's still the same thing. At risk, uncertainty, not you don't control it. It can go down in value, but you can actually change that. You can move those funds out of the risk bucket into a guaranteed bucket and certainty bucket. That's an annuity, by the way, which is something that I do. But yeah, just unfortunately, a lot of people are not aware of the strategies out there and the concepts that can work together. And that's a big part of what we're talking about here is the mindset as well. But the more knowledge that you have, by the way, the better questions you can ask when talking to a financial professional. And that is something I have learned the hard way. And so, yeah, but the better questions you ask, the better answers you're going to get.
We're coming up to the end of the show today. If we had time, I was going to pull up some kind of sample illustrations and what these look like with actual numbers going through them. But at the end of the day, it's best just to get your own personal situations. Everyone watching today, thank you for being here. Thank you for watching the recording. If you're on YouTube right now, again, my name's Stephen Nagy. It's a pleasure. We look forward to continuing to work with you and educating you into the future. It's what we do, education we do best. I look forward to you working with our money mentors for your personal situation. Brian Fouts, thank you very much for your time today. It's always an honor, and I appreciate everybody being here. We'll talk with you guys real soon. Thank you very much.